Which is the better bet, the growth stocks or the value plays in the tech bin? Well, joining us, Redesign Mobile Principal Analyst Rocky Agrawal and BoomBustBlog.com owner and editor Reggie Middleton. Reggie, great to have you with us today. I'm going to call this what's hot and what's not in the tech world right now. Rocky, you go first. Where would you place your money?
I think Google's always a good play. They've got essentially a tax on the entire internet ecosystem. If you want to get found online, you have to pay the Google gatekeeper, and I don't see that changing. I had some thought that Facebook might play a bigger role, but I looked at their search product that they launched a few weeks ago, and so far it's not very compelling.
Well, I mean, Reggie, Google was your winning draft pick, right? And we had you on when you were accepting your trophy, and you still said you'd put your money on Google. Today, even at all-time highs, still the same?
Most definitely, most definitely. Google is not only the toll collector for the internet, but Google is what I call the primary disruptor. Google is moving into Microsoft's cash cow and hegemony. Google, of course, has toppled Apple and RIM, and Google's moving to several other industries, such as media through YouTube, broadcast television. Google has a significant diversification play, a strong growth play, and depending on how you look at it, the valuations are not outrageous.
Reggie, do you agree with Rocky's assessment of Facebook and the fact that, you know, he's got some concerns about it?
Significant concerns. Number one thing I've never heard, as of the last reporting, Facebook has actually featured negative growth. Their membership has gotten smaller. This is supposed to be a growth play, and you can't be a growth play if you have negative growth. This is something that should raise concerns to any Facebook investor. Despite that, in addition to the fact that it was IPO'd at a ridiculous valuation, and as everybody lost their money immediately, it's starting to approach its IPO price, and that's a price that it never should have been near in the first place. At negative growth this quickly, Facebook is much more of a speculation, more of a option play than actual investment through equity.
And Rocky, what's your view on Yahoo? Marissa Mayer trying to do her darndest to put her mark on that place, like or not like those moves, whatever. She's trying to make some difference there. Is it going to work?
I don't think so. They've got some serious structural problems at Yahoo. They completely miss mobile. They completely miss social, and I don't think they have the talent there right now. The fact that they've had to come down and say you can't work from home anymore because we're worried that you might be lazy and unproductive, you shouldn't be having those employees in the first place.
But wait, to back up, and I actually, when that first came out, Rocky, I was like, what? In this day and age, of course you should be allowed to work from home. But now it seems the data has come out that a lot of those people working from home weren't actually logging in.
Sure, and you should have gotten rid of them. You shouldn't have waited for a company policy like this. If they were unproductive, they should have been fired a long time ago. And there are plenty of people who are unproductive who show up to Yahoo's offices. They should be gone too.
Do you agree, Reggie, that this is a company in deep structural decline, Yahoo?
Absolutely. And Mr. Algo has a very strong point. This is not only an employee issue, but a management issue. It's not a matter of forcing them coming into work. You force productivity. They have to have a stake in the company's growth. It doesn't matter where they are, so they're not productive at home, so now they're not going to be productive at work. If the management can't do better than that, then management is steward of the company can't grow. So, the structural decline starts at management, not at the employee level.
Let me take a look at some of the things that you've got a short on here, Rocky. Groupon, you've been on the show before saying this is a company that might actually go to zero. Yelp, what have you got else here? AOL, these are companies you're not keen on, right?
Not at all. Groupon, we saw some changes last week. I just was doing the math. Andrew Mason has made $62 million just on appreciation after he was fired. So not a bad way to go out, but I expect that to keep going back down because there are just some big challenges in their business that aren't going to go away anytime soon. Yelp is a company that is fundamentally misunderstood. It's a business that relies on small businesses not understanding what exactly it is they're buying. And AOL's just had structural declines. They've done well in the last couple of years, but I expect that to go back to where it should be.
So let's end on a high note, Reggie. Apart from Google, what other tech stock out there is going to give us some hyper growth and drive the NASDAQ back to highs?
Okay, well, I've been looking at NVIDIA. And I have if NVIDIA succeeds, Intel will be in itself in a structural decline. Intel has missed the ultra-mobile market where NVIDIA is hitting it on all four cylinders. NVIDIA's next generation chip, which should be released roughly in a couple of months or a month, looks like it's closing the performance gap with Intel and might even have passed it on the low end where Intel sells the Atom. If this works and you have massive adoption of the ARM chips for office work, then companies like NVIDIA and NVIDIA itself should be doing very well. From a valuation perspective, I'm not discussing, but from a strategic and industry perspective, NVIDIA should be replacing Intel on that level.
Okay, Rocky, Reggie, thank you so much for joining us.